Hello and greetings. This is Larry Tentarelli. I'm a full-time trader and the editor and publisher of the Blue Chip Daily Trend Report with a brief blog and video just to walk you through some of our top technical alerts and market calls so far for 2020. So to get started, this weekend, yesterday actually, I sent out to our members an updated market trend update blog and video with my current technical overview of the S&P 500 and the NASDAQ 100, along with updated risk management and volatility management concepts. So the markets have been a little bit weaker. They were weak into the close on Friday. And the key thing is, if volatility or the selling picks up this week, then we already have a full plan in place. So I've already outlined technical levels on the S&P 500, technical levels on the NASDAQ. We took a look at a few other markets. And also, by the same token, we've got a watch list ready of top uptrends that are ready to go. So key thing, what I do at Blue Chip Daily that's a little bit different than what's out there is I focus on a consistent discipline process focused on price analysis and trend analysis. So I don't make market predictions. I don't focus on economic news. I don't use predictive chart patterns. What I do is I focus on what the market's actually doing. I focus on price and price trend, and I'm looking for explosive upside opportunities, but I also focus on managing risk every single day. So I share my best technical insights daily with members on this website and also on the premium Twitter feed. And then just to walk you through a few of our better updates, our technical alerts so far this year. So I'll touch base on these quickly, and then you can read more if you choose to, as there's blogs that are attached to the page. So I went defensive on the S&P starting at the end of February. When the S&P broke 3,200, which was on February 25th, we went into a fully defensive capital preservation mode, which I shared that with our members in real time. And then starting on March 14th, I outlined in our weekly members report and video my plan to start to scale back into stocks after being 100% in cash. And then I've continued to post every single market day for members our best technical ideas and market commentary based on actual what's happening in the market. So not a focus on the news, not a focus on predicting a new low or a retest of the lows or anything like that. And I'll go over some of those with you in a minute. But so a couple key items. Late February, when we went defensive, when the S&P broke 3,200, if you click onto this link, it will take you to a blog that's on the website from February the 29th, and it will show you screenshots. It will walk you through a video. It will show you some of the charts that I looked at and some of the insights that I shared with our subscribers in real time as far as what I was seeing to cause me to go defensive once the S&P broke 3,200. And we stayed like that for a while. And then in mid-March, March 14th, I outlined in our weekly report a plan to start to scale back into stocks over the next week or two. And if you click onto, now this is when the S&P was under 2,500 from 3,200. If you click onto this link, it will take you through another blog and video that's on the website. It will walk you through, once again, some screenshots. It will walk you through a copy of the weekly report that I sent out to subscribers as far as what our plan was. And then I scaled back in. So my first buy was in XLK on March 18th. The S&P was trading right about 2,300 as of that time. And then that same evening, I put together a blog and video for our subscribers with my top 25 recovery ideas. So this was large cap blue chip names, technology, energy, pharmaceuticals, consumer products across the board. So I shared this with our subscribers. Now keep in mind, we went defensive at 3,200, and I put together this list on March 18th and March 19th. And then, as we know, 3 trading days later, March 23rd, the S&P put in the low for the year, currently at 2191. On March 26th, I posted on my website and also on the public Twitter feed a blog that outlined the fact that in the 2008 bear market, close to 40% of the S&P 500 names put their lows in 5 months before the index did. And what I wanted to do, and this is something that I shared with subscribers, I was going to focus on individual stock charts just as much as the index, because I knew that stocks would often put their lows in before the index did. If you click onto this link, it will take you to another blog on the website. This is from March 26th, and you can see the video of what I was looking at the time. So what I wanted to do is adapt to the market as market conditions changed. On April 5th, I posted for members an energy sector blog and video. Now keep in mind, this is pretty much when the market was still trading around near the lows. A couple of ideas in that video. The energy ETF XLE went on to rise 53%. XOP went on to rise 112%. And then Halliburton, which was an idea featured in that video, went on to rise 118%. So it doesn't mean that anyone necessarily bought at the exact low or sold at the exact high, but there was quite a lot of move to be caught in there. And the key thing is that while the media was focused on a lot of things other than maybe chart ideas, I was looking for best technical ideas that I could find with risk management. On May 31st, I posted for our members a top 10 potential long-term recovery ideas blog and video, and this had some names that worked pretty well that week. These were deep cyclical names below the 200-day moving average. Names like Boeing, names like General Electric that performed pretty well that week. But once again, just to focus on providing members with best technical ideas with no opinions, charts, technicals, and risk management. And then just as a follow-up, as I said, we've continued to post daily best ideas for members on the website. We have a feature called the Chart of the Day, where I'll post a daily best idea. It gets posted and it gets emailed out to members that opt in for it. And we've had some good ideas. Zoom's up over 100% since we posted the idea. Shopify up 121% since we posted the idea. And then you can scroll down and see through some of the better ideas. Now, also on the website, if you click onto the recent best trade alerts page, it will take you here, and you'll be able to scroll down and see through. So for example, Square, we made Square the chart of the day. So this was our daily best idea on May 7th at $68.10. So I've got a position here in Square. Square made a new all-time high on Friday, closed, it touched over $106. So that's up about 50% since we put it on the list. So there's a lot of information that we shared with subscribers. Obviously, we've got some chart of the day ideas and best ideas that don't work out. So we always put a stop risk level that's anywhere from 10, 12 to 15%. So what we find is that if we have ideas that go up 30, 40, 50, 90, 120%, and the ideas that don't work out, they get closed out at 10, 12, or 15%. It makes out for very good math. And then obviously you can click on the best ideas trades, but the key thing is that, as I said, I focus on a consistent process for members based on price analysis, technicals, and risk management, and we are prepared going into the week for whatever the outcome is. So I appreciate everyone's time, and I hope to see you online shortly.